All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader with T3 Trading Group and leader of T3 Live's ProDesk virtual trading floor. Real quickly, before we get into any market discussions, here's a look at Derrick's current positions. Again, as I said, he is the head trader with T3 Trading Group. This is what he's currently in as our discussion begins here today. Derrick, a very balanced long and short portfolio here. Exact number of longs and shorts.
I am net short, though. The size of my shorts.
I mean, yeah, sizing-wise, yes, of course. All right, so our topic today, or the title of our stream today, rather, being New Week Bounce, and what a bounce we are getting after the sell-off we saw on Friday after the bad jobs report, the new tariffs. It was quite a day on Friday. The VIX is down, the NASDAQ is up, the S&P 500 is up, the Dow is up, everything is up when it comes to the major indices. How are you feeling when you look at what happened Friday and then the action today about this market and where we're headed?
Sure. So I don't think that Thursday, Friday is anything to really panic about at this point. This was our first 2-day pullback in, like, as long as I can remember. We had like one with like a really, really small pullback in June and a really small pullback in May. But for the most part, it's the first time we've gone down at all since our April crash bear market that we had, right? So these last 2 days, it doesn't seem like it's been destructive to this market really at all. It honestly just feels like more profit taking from the trend following community, coupled with sentiment and valuation. We're both getting a little bit frothy, and then you hit the market with a little bit of a weaker jobs number, and it seems like maybe the tariff risks are being taken a little bit more seriously. But you kind of just combine the run that we've had with where valuation and sentiment got. All it took was a little bit of a scare from an employment number to knock us down for 2 days. But again, I don't think that that's broken the market structurally at all at this point. My biggest expectation for August really is going to be primarily chop. I'm expecting us to, dare I say that I don't think that we're immediately going to snap back to all-time highs, because this market's been so strong and so resilient that it may happen. But my expectation for August is going to be more chop with a little bit of downside risk to it. And then those downside risks, I think, increase as we get to the second half of August and throughout the month of September. So it's kind of just where my head's at right now. So it was a really big 2-day move to the downside. Especially given that it was a Friday. A lot of times when you're selling off on a Friday, people don't want to take risks into the weekend. So I'm not surprised to see that we are snapping back the amount that we are today. The S&P is up 1.3% as we're having this conversation. But all that bounce back is doing is getting us back to the ADMA on the daily chart. After actually on Friday's low, we had seen some degree of extreme downside extension. So all we've done so far is fully satisfy the downside extension. The big question is, do we get a lower high that leads to more sideways action, or even that leads to a lower low, or do we just snap immediately back up to highs? A lot of that answer will be found within the leading area of this market, which has just been AI, semiconductors, NVIDIA, AMD. It is really on the backs of AI that this market has been able to have the rally that it has had. It's been nothing short of incredible. But if those areas are a little bit tired, I think we have AMD earnings this week, then we're not getting right back to new all-time highs.
The reaction to the jobs report a little bit interesting, because obviously, of course, the market's looking for weak data to support a Fed rate cut. But of course, a slowing in the economy, not good for the market overall. What did you think about that reaction on Friday? I know you said like overall market, of course, still higher as we're seeing today. But what did that signal to you about how investors feel about the actual slowing of the economy that the Fed needs to cut rates?
Sure. We're in a scenario right now, and it is constantly evolving, right? But we're in a scenario right now where moderate bad news is good. Moderate bad news means that the sky is not falling, but the Fed has room to cut. So I think that the jobs number, that the non-farm payrolls number for July that came out below expectations, I think it's 73,000 jobs added. It was below expectations, but I think that was actually kind of like a perfect number for, we're getting a little bit of economic slowdown. It gives the room Fed to be able to cut, but the sky is not falling. The bigger problem was actually the revisions to the previous few reports there. There were really big revisions. I think they were enough to push Friday's number from like perfectly bad, if you will, perfectly bad, so that the Fed cuts and the market could continue to hold up, but the economy is still okay, to a little bit over the edge of more problematic. And then, on top of that, I mean, this is more my personal opinion. Donald Trump came out after and said that he's going to fire the, commissioner of the Bureau of Labor Statistics. I just also personally think that that's a bad look, because whether he's right or wrong, I'm not going to give my opinion on that, or I probably would if you wanted me to. But I think it's just a bad look, almost similar to what he does when he starts yelling at Jerome Powell, which we have seen negatively impact the market as well. You don't want to take some of these, like the Bureau of Labor Statistics or the Fed, which have always primarily been viewed as independent, and try to make it look like everything is being done for a political gain, when in my opinion that is not true, because that just can have a big destabilizing effect on the market if all of a sudden you start having a back and forth, depending on who the president is, on everyone denies every bad number as being false just because it makes you look bad. So, I don't love that. It certainly makes me a little bit nervous. I actually think that helped give the market further follow through to the downside on Friday. But, for the moment, like I was saying before, this is just a run-of-the-mill profit-taking situation. We would need to see continued large realized volatility movements and a more sustained down move to turn this into something worse, right? You hear me talk about feedback cycles all the time. Markets work in feedback cycles. Buying leads to more buying and selling leads to more selling. The question is, the 2-day down move between Thursday and Friday, is that enough to trigger the feedback cycle that can actually lead to more selling in and of itself? I would argue no. When you look at like where the CTA sell triggers are that would begin to create additional selling from the systematic community, or the amount of continuous large realized volatility that you would need to get selling from vol control, we're not there. So it inclines me to believe that this is not a big issue, that we had a 2-day pullback. And let's see if we chop around here in the beginning of August or not.
The last Fed meeting was last week. We've heard from the chairman on Wednesday before the jobs data on Friday, and it was kind of inconclusive on if we would, or the market couldn't really deem if a September rate cut was coming. And then we got the jobs data on Friday, and now we see an 8, like the bet on the CME Fed watch is 88% currently expecting a Fed rate cut. So I think of course, there's going to be more data to come before the September meeting. We'll get another jobs report. We'll get another CPI report. We'll get another PCE report. So all the things the Fed is looking at when it comes to that. But tend to get backward revisions too. Those revisions in the jobs report were, I think, something that, that wasn't the headline. It wasn't the headline number, but really big backward revisions lower to the previous 2 months too, which was important for that data as well. Like you mentioned, it is a big earnings week. Last week was a big earnings week. We still have big earnings this week. Today, Palantir after the market closed. Tomorrow, AMD after the market closed. Wednesday's DoorDash and some other numbers as well. How are you feeling about earnings season so far? You and I talked pre all the Mag 7 earnings last week. So looking back on those reports and then the reports that are coming this week.
Yeah, so another really important week this week. I think like 11% of the market cap of the S&P is supposed to report this week, something like that. So it's really, really big number. How earnings season has been going is honestly exactly as you and I predicted a week ago when we were talking, where if you report a decent report, an inline report, a little beat, it's consistently not good enough in this market. You need to report like phenomenally crushing upside reports in order to be able to move higher. And two companies that were able to do that are Meta and Microsoft. Meta and Microsoft, it seemed like when Jerome Powell, I know you just mentioned the Fed, he was very hawkish, more hawkish than most people expected last Wednesday. It seemed like that was going to be the trigger for this market to start to finally be able to break lower. Most of last week looked like the market was going through a distribution pattern to me, which then can lead to a decline. And then Powell seemed like he was driving it home for the people who were on the short side of the market. And then Meta and Microsoft came out and they just crushed those earnings reports so incredibly that it seemed like it was going to save the entirety of the market. But that's what's required in this environment, I think, to go higher. Meta and Microsoft, they didn't just beat their numbers. If you look at those numbers, they are phenomenal. Like some of the best earnings reports I've ever seen. And appropriately, the stocks went up huge on them. I was asking the team, I was like, imagine when you think about Thursday and Friday's market sell-off, imagine how hard we would have sold off if Meta and Microsoft just came in line. Those numbers were so incredible. Meta was up like 12% on its report. And yet, even in the face of that, we were still able to actually have a 2-day sell-off. You look at other earnings reports, you look at Amazon. Amazon wasn't that bad. I mean, people seem to be a little bit upset about AWS not growing as much as like Microsoft Azure, but AWS is the incumbent. They're so much bigger than the other ones. But that report was fine, and the stock is beat up on it. The Apple report was fine. It was good. And immediately they ticked Apple higher, but they ended up selling Apple down on its report as well. So just that's the theme of this earnings season so far. It's not that we can't move higher with companies when they report, but those earnings reports have to blow you away in order to be able to go higher. If it's in line, a small beat, you're probably not going higher. There's a good chance you're going down, and let alone if you actually miss and come in short. But we have had, from like a look back perspective on the second quarter, for the most part, it's been a great earnings season in terms of companies beating expectations, albeit expectations were very low going into the reports.
Can we look at the Palantir chart headed into earnings tonight?
Yes, we certainly can. If you want to pull up my screen share for me. I'm just executing a trade really quick. Okay. But I'm looking at Palantir. Sure. I mean, Palantir's another one. This has kind of turned into like a fairly consistent pattern. We'll see if it happens again, where with the exception of that one earnings report, yeah. So they had these two earnings reports back in November when it was the $40 stock that really set off this entire thing. That was coupled by then this earnings report back here in February, which was just a monster. Ever since then, it seems like the stock has gotten so expensive that the last few quarters, I almost can't even find them within these charts here, but the last few quarters, this is probably one of them. It's also gotten into a situation where good has not been good enough. I remember the last earnings report, I can't really find it on the chart. It must be this move lower here, when they ran it up into the report. Yeah, it must be this. They ran it up into the report for like 2 weeks straight up from $100 to $126. The report came out. It was good. It was a good report. And then immediately the next day, the stock sold all the way back down at 106. They traded it down $20 on a really good report. I'm inclined to think similar for this time around. Now the stock is even more expensive. The valuation is even higher than it was on those previous instances. Could Palantir report a absolute dynamite, blow your socks off report, a little bit more similar to Meta or Microsoft where it goes higher? Sure, it can definitely go up. And the chart pattern in and of itself going into the report is very bullish. It has not extended as much as it did like into that last report, but the overall move it's still gone from 110 to 160 into the report, even if it hasn't accelerated recently. So if you look at the chart looks bullish here. It's building a really nice bullish ascending wedge. But personally, I think that the stock, I mean, it's just one of the most expensive stocks ever. Let me try to pull up the multiple numbers right now as I'm chatting with you about it in my other screen here. Palantir forward PE is $218. The actual PE is $700. Price to sales is 121. Price to free cash flow is 286. I mean, these numbers, it's just an incredibly expensive valuation, very far away from the 200-day. It's gone up, up, up and away. I think Palantir is a phenomenal company. It's just too expensive here. So I'm inclined to think that the risk is to the downside, but the pattern is bullish, and there's no way to know until we see the report come out.
Brian on YouTube said Microsoft earnings were good, but it ran up for months prior. Also couldn't find guidance for next quarter. Meta was the better winner, in my opinion. I think you would agree that Meta was the winner. Meta up another 3% today. Can we look at the Meta chart and like what has obviously a huge gap after earnings and then a pullback on that Friday, but you can see up again today. Are the technicals different now on Meta at $772 than they were last week?
Meta looks phenomenal. Meta looks like higher to me. As the market was pulling back over the course of the last two trading sessions, I was basically telling everybody on the team, like, Meta is the name to watch for the dip buy. If you think that the market is going to have a bounce back, then Meta is the one that you want to own for that. Unfortunately, they made the execution setup there a little bit tricky. What I would have loved, it would have been the ultimate layup, would have been if we could have got a nice juicy gap down from the market, like close week on Friday, have a nice juicy gap down today. It would have been a day 3 gap down with extreme downside extension. In that situation, I was planning on doing some serious buying at the index level with some of the leading stocks, and especially with Meta. That is the one to buy. I would say Microsoft also. If we could have gotten one more down move this morning, these names would have been the names to buy. In and of itself, Meta looks like higher, but the setup to buy was actually very tricky. I didn't want to rush in and buy on Friday with the amount of extension that it still had off the ADMA on the daily while the market was getting hit. I just felt it was too early of a buy. And then they gapped everything up this morning and didn't really give you the chance to enter. They just gapped it up and continued Meta and pretty much the entirety of the market. So, for me, we look for those trading setups, but I still want to execute things when I feel like I have a really good risk reward. I would have had that on a gap down today and did not get that in a gap up. So for me, for the moment with Meta, it's just about, let's watch how this thing sets up over the course of this week. Can we get this thing to move sideways, make a bullish consolidation, make a bull wedge, let the ADMA on the daily catch up a little bit more, and then it can look viable, assuming that the market also looks like it's going to be supportive as well. But it's a go-to name, I think, that everybody should have on their watch list, where if you're looking for something to buy, Meta and I think also Microsoft should be kind of at the top of the list right now, until and unless they show you that they fail. If Microsoft sold down, Microsoft, by the way, has a history of gapping up on really good reports and selling down on them. But I think that Microsoft is a buy as long as it does not get back below really 510. If it gets back below 510, it goes into the penalty box. We worry about it at some point again in the future. But for the moment, I think that trade setups to the long side for Microsoft Meta are going to be very viable.
For a while, Meta was in the penalty box for its focus on the metaverse and virtual reality and not making any money on any of those things, even though they were spending a ton of money. Zuckerberg really transformed that company to say, okay, this isn't working. Let's focus on AI. This is the future, and this is where we should really be focusing. And they're definitely getting rewarded for that. What did you think about the report and their focus on that and how they've been able to really pivot and make it a winner?
Yeah, I mean, Mark Zuckerberg is just a phenomenal executive. He's a phenomenal CEO. And he is tenacious. Does not fear spending a lot of money and being wrong. We saw that when he was doing the metaverse back in 2022. It absolutely wrecked the stock. but he listened to the feedback that was, you can see it here, absolutely wrecked the stock all the way down. But he listened to the feedback of the market, and the market said, we don't like this. And then on one of these earnings reports on the way back up, it was the earnings report of efficiency, where, we're going to be really focused on spending our money responsibly and being more efficient with it. And he is still spending money on the metaverse, but no one seems to care. The interesting thing is that it's almost the opposite, at least right now, and this could change in the future, but right now it's the opposite when it comes to AI spend. The market is rewarding these companies for increasing their AI spend. The market is telling us that it, at least for the moment, thinks that AI is basically the future of business, the future of efficiency, and the future of our world. So when you see these huge increases on CapEx from Meta, we really saw it more from Microsoft on its report than from Meta, but I think Meta increased their CapEx guidance a little bit as well. The market is for the moment really, really rewarding these companies. The question has been, I've been saying it for a year, and I have no idea on the timing of this. At a certain point, this degree of spend actually has to translate into more real revenue. That has not happened yet, and the market is fine with that. But at some point, someday, I don't know when, next quarter, next year, 5 years from now, if they're continuing to spend the way that they're spending without really seeing the results at the bottom line, they may begin to punish these companies a little bit in the same way that they actually punished Meta for the metaverse. But for the moment, at least, it is the complete opposite situation.
All right. Last week when we were talking, you looking at the market, you were looking for either a breakout or a breakdown. When we look at the technicals now, after Thursday and Friday, and then today's bounce, what do the technicals say about where this market's headed?
Yeah, so I mean, first of all, without a doubt, I was looking for a breakdown. I felt like we were entering into a more distribution type pattern for the market. I really started to notice it when, and you've definitely heard me say this before, one of my favorite signals for the market is when you can no longer continue to move higher on incrementally better news. It seemed like we were getting that with the Japan deal, with the EU deal. The market was not, we would gap up on it and then we would sell all the way back down. And it just seemed to me like it was a distribution pattern. Now the market, the uptrend is still intact here. We are still in a pattern of higher highs and higher lows, but we had on Thursday what I call a day to take notice of. Basically on Thursday, we had a negative Maribozu bearish engulfing candle that encompassed like 6 days worth of price action. That's a day to take notice of. And the volume upticked on it a little bit as well. Then we got some follow through to the downside on Friday. But that follow through to the downside, that 2-day sell-off, that does not break this trend. That does not break this trend. For the moment, it's just a bigger picture potential higher low. The question from a technical basis is this push higher that we're having right now as we're having this conversation, where does it lead to? Are we, by Thursday, are we making new all-time highs? In which case then higher highs, higher lows are just continuing. Or somewhere between where we are right now, 630 and 640, do we get a little bit of a lower high that comes in that then brings us back down? If that happens, the lower high in and of itself, I think, would make the market become much more neutral. And if you got a lower low, then technically you'd be breaking the uptrend and reversing it to a downtrend, at least on a smaller time frame. So here right now, the technicals are, I would say, inconclusive. After we've had our day to take notice of, we need to see if that turns into something more or not. I am looking very closely actually into this area, because right now we're back into the ADMA on the daily, to see if this market gives us some degree of a lower high, because my biggest expectation for the month of August is chop. I do not think that August is going to continue to trend higher in the way that May, June, and July trended higher. I do not think that's going to happen. I also don't really think that August is going to turn into a March or an April. My general big picture thesis, which I will adjust as these technicals present themselves over the course of this week and next week, my general thesis is that we're going to see more of a choppy August with maybe a little bit of a risk to some degree of a downside grind that gives way to more bearish fears in the back half of August into September. But for the moment, we're waiting on technical confirmation. Is this the higher low? Do we get a lower high? Is the trend breaking? Are we going into a consolidation? Are we going into chop? We need to see how the dust settles after our 2-day sell-off, and a half a day market bounce that we've had so far. Even though it's a really big bounce, the S&P is up almost 1.4% as we're having this conversation. For me, that's not enough. I think that we're going to run into some degree of selling here, honestly, right where we're trading right now through maybe 632. We start really getting above like 632 to 634. I'm going to be like, all right, I'm probably working our way back to all-time highs. But as we're having this conversation right now, I'm looking for technical signals on the small time frame to really reintroduce my shorts with more vigor. And, watch the 5-minute. It's also August, so midday trading can be a little bit dangerous. But I'm looking at a 5-minute right now where if this 5-minute trades back through, I'm just looking at my 5-minute chart on my other screen, like 629.70, that might actually be a bigger signal off of this daily chart. So we shall see.
Are there any individual charts that you like here? When you're waiting for confirmation on what the
we already kind of discussed my favorite two. My favorite two right now,
okay.
by anything, are Meta and Microsoft. Those are my favorite two go-to names based on those earnings reports, where if this market's going to break higher, those are the ones to own. I'm still very much trading some of the crazy stocks. If they begin to go, I've got my eyes. We're seeing some of them squeeze a little bit today on Kohl's, on BBAI, which is having a big update today. This JOBY, I am blown away that this thing is trading at $21 when they announced an acquisition of another company. 95% plus of the time, news like that actually brings the stock lower, but it also gave a beautiful breakout through $18. And, there was a great technical setup through that $18, and it's a short squeeze meme name. But I'm blown away that this thing's trading up at $21 on that news. So I'm still very focused on those meme type stocks because they gave a lot of trading opportunity in the back half of July. And personally, I was able to do really well with them. Like this QS was a big short for me. Shorted from 15 all the way down to 9. It was a really, really good trade. So I've got those on the radar. Microsoft and Meta seem to be what you want to be long. But the thing to watch more than anything, I think, is AMD and NVIDIA, especially AMD on its earnings report. NVIDIA's report's still a little bit farther away. We have seen very consistently semiconductor names this earnings season not perform well, even if the reports are decent. It started with Micron, which is technically the end of last earnings season, but Micron reported great numbers. Gapped it up to 130. That's been the high ever since. It has not traded well, and that was on really good numbers. Then you had ARM report. It was not great. They traded it down. You had ASML trade lower. You had AMAT trade lower on Thursday of last week as well. So it's been, this morning we had ON Semiconductors. These are not the AI leading names though. AMD and NVIDIA are the AI leading names. But this AMD, I have a little bit of a short position on right now. I'm trying to not be too aggressive because it's right in front of the earnings report. But we started to really communicate an AMD short as this stock began to go parabolic last week. And that short worked great. I covered a large percentage of my position into Friday's down move. I've reshorted some of that into the up move today. But again, just being cautious in front of the report. AMD's report, I would say AMD and NVIDIA, but NVIDIA is so far away. AMD's report right now, in my mind, is the most important event of the week because the reason why the market's been able to be as strong as it's been is because of the AI trade. I keep talking about it like a tale of two economies. One economy is based on more of the macro environment, and it's not good. You can see it in Berkshire Hathaway. If you want to just type up something real quick. Berkshire Hathaway, owning Kraft Heinz and Coca-Cola, a lot of like middle income consumer related companies have not been performing well. The companies that are more retail based, that are going to be more influenced by tariffs, are not performing well. A lot of them, if you start typing up stocks, a lot of them look very different than the S&P and the NASDAQ. The S&P and the NASDAQ V-bottomed in April and made new all-time highs. A lot of those stocks have only retraced back higher about 50% of their initial down move. But it's the AI trade that's done this. The AI trade is the reason why the S&P is at highs. It's the reason why the NASDAQ is at highs. Look at these moves. AMD went from $75 to $183. NVIDIA went from $88 to $183. I mean, these stocks, it's been incredible, but they don't care about the macro stuff in the same way, and nor does like a Facebook in a lot of ways. I guess there's a read-through that if tariffs got really, really bad, that a lot of companies would cut down on their advertising spending. But otherwise, what tariffs is Meta facing? So the answer is none. And so you've got the AI economy as represented by most of these Mag 7 related stocks on the one hand, versus pretty much everything else on the other hand. And it's almost like two completely different pictures. So circling back to things, whether this S&P SPY gets back above 640 and really is able to continue, and this was just a blip lower in the overall uptrend, I think is very much going to depend on the continuation of that AI trade, which I think is very much going to depend upon AMD's earnings report this week. So I think it's the most important event.
All right, most important event tomorrow after the market closes, AMD's earnings report. All right, Derrick is a real trader, so I'm going to let him get back to that. You can go to t3live.com/DOLive to get his free ebook. It's about the benefits of prop trading, how you can work with Derrick himself and his team there on the T3 Trading Group site. So again, t3live.com/DOLive for that. Derrick, have a great trading day, a good week, and talk to you soon.
Thanks, Greta. Have a great day.
Thanks.